Guys, this is the S&P 500 weekly technical analysis for the week of May 6th. In the previous week, everything went well on Monday, Tuesday, Wednesday, Thursday. Friday was the surprise because of Apple and some other factors. Now, many might think that because of this kind of swing, the trend has changed. No, the trend has not changed. This has brought some relief to the entire US stock market, but the trend is still bearish. And this trend will change only and only if there comes 5 good or heavy bullish candles. What is happening on the lower level charts? Is there any early indication of the trend change? Whether it is going neutral or so? I will discuss everything in this, the S&P 500 weekly technical analysis. So now let me quickly recap what has happened last week and what we were anticipating. In my previous S&P 500 weekly technical analysis, there was only one condition for the bullish retrace, and that simple condition was the zone. There was a very strong zone, and only if the S&P 500 manages to clear the zone, sustain above the zone, there will be more bullish movement, and if it fails, then it will remain bearish no matter what. This was Monday. If you notice, again and again it struggled to move up and it failed. On Monday, April 29th at 10:30 am Eastern Time, in my first update to my Patreon community members, it was clearly mentioned that S&P 500 will try again and again to breach, to hit the zone, but the pressure won't allow it to move up. And at the same time, it will come down, but it will find very good support at this particular strong support level. This means that for the entire day, it will keep on trading between these two levels, just up, down, up, down, up, down. Now, because the S&P 500 was rejected by the zone on Monday, so it was very much clear that next day, Tuesday, there will be a fall. This was Tuesday, April 30th, first update at 10:30 am Eastern Time to my Patreon community members. And everything was clearly mentioned in this, the first update, that now we are anticipating a good fall, a good bearish movement in the US stock market. So on Tuesday it came down heavily, and on Wednesday it was a Federal Reserve Chairman FOMC decision and everything, right? So what we have seen that during the press conference, S&P 500 moved up heavily. However, it moved up to the level, to the strong resistance level, and it failed. It failed, but it was still sustaining around 5084, 5085. And that was the time when the press conference was over, and again I mentioned this to my Patreon community members. This press conference is either negative or neutral, but there is nothing positive for the market. And then we have seen a sudden fall, a very heavy fall. So there is the special condition that next day on Thursday, either there will be a gap down open, or irrespective of any open, gap up or gap down, it will come down to fulfill its technical obligation to the previous close. Next day you have seen it gave a very good gap up open, but still it came down, it fulfilled its technical obligation. So now I have shown you the movement on the daily basis as we were expecting, and as it was predicted, it was there. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for these daily precise updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. First point of the agenda is the S&P 500 technical analysis on the weekly chart. On the weekly chart, there is a little change in the stochastic RSI. There is a crossover in the stochastic RSI in both S&P 500 as well as Dow Jones. So I will discuss that here on the weekly chart. And weekly chart is the long-term picture, okay, means the big picture for a month, okay, for a quarter or so. So I will show you that what we are expecting through the weekly chart. Second point of the agenda is the S&P 500 technical analysis on the daily chart. Now on the daily chart, there is a little change. And this little change was especially seen on Friday. The MACD and the stochastic RSI had changed to bullish. Although this was an engineered movement clearly, but still the MACD and the stochastic RSI have changed. So they will provide some bullish relief to the stock market, to the Dow Jones, to the S&P 500. So I will show you the daily chart. I will show you the technicals on the daily chart. Okay. Now, third and the last point of the agenda is the probable movement of the S&P 500 from May 6th, which is Monday, to May 10th, that will be Friday. Whatever is going to happen in the S&P 500 next week, I will discuss the zone and the movement above the zone, below the zone, and then the trend line and the movement below and above the trend line, and this and the range. Okay, everything here in this, the last point of the agenda. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to join my Patreon community in order to get the daily and precise updates of the S&P 500 from Monday through Friday, then I've given the link in the description of the video and also in the comment section. Now guys, I'm going to begin with the first point of the agenda, that is the S&P 500 technical analysis on the weekly chart. Now guys, we are here and this is the first point of the agenda. And this is the weekly chart of the S&P 500. Let me write it down. Weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Okay, one candle means 1 week. Okay. So guys, before I begin, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. Now let's first analyze the candle. This is the weekly candle of the S&P 500. Okay. So there are some special qualities of the candle. Number one, it's a bullish candle, a small bullish candle, but there is a long tail. So a bullish candle with a long tail, and other than that, the closing of this bullish candle is above the closing of or the high of the previous candle. Okay, above the high of the previous candle. Other than that, if you notice that this weekly candle has closed above all of these are moving averages. So moving averages, okay. This means that this candle is filled with many bullish qualities and is indicating more bullish side movement at least for Monday. More bullish side movement at least for Monday or the first half of Monday. So this is what the meaning of this candle. Okay. Regarding the gap up open, okay, no, this candle is not confirming any gap up open. Okay. Now let's quickly see the candle, the weekly candle of the Dow Jones. Now this weekly candle of the Dow Jones, okay, this is a good bullish candle. Okay, and all of the qualities are there, closing above the moving averages, the high of the previous candle. Okay. And all of these are bullish qualities, just like the S&P 500. Okay, they are there in the weekly candle of the Dow Jones. But this weekly candle of the Dow Jones is more heavy as compared to the weekly candle of the S&P 500. This means that if any bullish movement or if any bullish retrace has to come, this bullish movement or this bullish retrace will be seen through the Dow Jones. Through the Dow Jones. Okay, clear? Now, candle is clear. Now let's see, let's analyze the technical indicators. So in terms of the technical indicators, okay, what we can see here, that now there is a clear fan out in the moving averages on the weekly chart, bullish. Closing is above the moving averages, bullish. Okay, here it is all bullish. Okay, MACD is bearish. And the stochastic RSI had just given a bullish crossover, but still below 50 mark. Okay, so we can consider that it is somewhat bullish. And other than that, the S&P 500 is a little saturated. Okay, a little saturated and a little overbought. A little saturated and a little overbought. So all of these technical indicators confirms that the S&P 500 on the weekly chart is more bullish and is about or is around 70% bullish. 70% bullish on the weekly chart. Okay. On the weekly chart of the Dow Jones, and guys, once again let me clear that here I am not predicting the movement of the Dow Jones, okay, or this thing. I am simply using the Dow Jones as a reference for the S&P 500 so that we can get accurate readings or accurate predictions for the S&P 500. Now, in case of the Dow Jones, okay, almost the same thing, the same moving averages, same everything is there. Okay, and MACD is there, and MACD is bearish, and stochastic RSI has changed, and again, so Dow Jones on the weekly chart is also 70% bullish. Okay, 70% bullish, 70% bullish on the weekly chart, S&P 500 and the Dow Jones. What it means, so what does this mean, the 70% bullish? This 70% bullish on the weekly chart means that the S&P 500 on the daily chart has the chances to regain its bullish trend. But in order to regain its bullish trend, there are some very heavy conditions. Okay, that I will discuss in the next point of the agenda. Okay, but here in terms of yes, there is one thing that I can say, or I can show you here. Okay, on the weekly chart of the Dow Jones, it is, if you notice, last week I mentioned that if there comes any kind of small candle, green or red or a bearish candle, then these moving averages will give a crossover. Okay, and then there will be no other option for the stock market but to come down. However, you can see that because of this very heavy movement on Thursday and Friday, which was clearly an engineered movement, clearly an engineered or a manipulated movement. Okay, some might say Apple posted better than expected earnings. Okay, no, Apple's earnings were bad. However, as per the newspapers and the news channels, okay, they were saying that because the earnings are not as bad as the Wall Street is anticipating, that is why Apple stock is moving up. They were giving one more reason, and that seems a valid reason, that Apple has informed that there will be a $110 billion buyback. So whenever a company, okay, it says that it will buy back, okay, in that case the stock, it moves up around by 2%. It happens globally, okay, irrespective of the country or the stock market, around 2% movement we expect in that particular stock. But yesterday Apple was 7% up. So there was absolutely no reason why the Apple should trade 7%. At most 2% because of buyback, but because of the earnings which were not as per the expectations of the Wall Street, the Apple was supposed to trade flat or bearish, flat or red. Okay, no 7%, no 2%, no 1%. So this is why that is why I'm saying this 7% bullish movement in the Apple, clearly manipulated. 2% bullish movement in Microsoft, around 4% bullish movement in Nvidia, and forget about all of these, the Goldman Sachs. Okay, Goldman Sachs, it moved up at one time by 2%. So there was nothing, okay, there for the Goldman Sachs. But looks like that the stock market, the Wall Street has predetermined that no matter what will happen, we will simply push the market up. That is why I am saying that because of this engineered movement, because of this manipulated movement, these moving averages are in a condition wherein there was no bullish crossover. Rather, looks like the moving averages are forming a slip, because this is a forced movement, this is a compelled movement, this is an engineered or a manipulated movement. So next week will be very, very crucial, because if there comes one more bullish candle in the next week, in that case, whether this was manipulated or so, in that case, even this the manipulated movement, it will align with that the next week's movement, and then things will change. So now I hope everything is clear. Now guys, I have one more information to share with you. This is the S&P 500 or the stock market knowledge transfer program. Through this program, I teach everything, whatever I know, movement, tracks, strategies, trend analysis, predictions, everything, okay, whatever I know. And the motto of this program is to help you become self-reliant so that you can trade all by yourself. And this program is delivered one-on-one basis, and also because we are going to talk about the technicals, the fundamentals, okay, strategies, everything. This will be applicable to any stock, any index like Dow Jones, S&P 500, Nasdaq, any stock, okay, premium stocks, currency pairs, USD, JPY, okay, USD, GBP, USD, Euro, any currency pair, commodity, gold, silver, copper, and crypto. And guys, this is my email address. Whenever you want to participate in the program, or if you have any questions, you can simply drop me an email. More details are there in the Google spreadsheet. And when you open the Google spreadsheet, then you will see everything is here, what I'm going to discuss from basics to the advanced levels, fundamentals, the technicals, and how to predict the movement even before it happens, options in very detail, options strategies, and the support and resistance levels, and deduce the trend of the stock market, and everything is here. And these are the important terms and conditions, and these are the snapshots of the meetings. So guys, this is my email address. Whenever you want to participate, or if you have any questions, then you can simply drop me an email. And also I've given the link to this program in the description of the video and also in the comment section. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And here I will do the technical analysis of the S&P 500 on the daily chart. Let me write it down, daily chart. Daily chart, D as in daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. So guys, before I begin, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for these daily and the precise updates, the precise analysis of the S&P 500 from Monday through Friday, each and everything, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, let's discuss the candle. If you notice, this is the last candle. It's a normal or a small bullish candle. Okay, normal or a small bullish candle. And also this candle, it has closed inside the zone. Okay, there is a zone. This is my calculated zone. Okay, heavy resistance zone, and this is the same zone I've discussed in my previous S&P 500 weekly technical analysis, that for any bullish movement to happen, okay, forget about the trend, bullish trend or so. Now, for any bullish movement to happen, the S&P 500 must clear the zone, must sustain above the zone, must close above the zone. So now here in this case, what has happened? In this case, because of high and heavy manipulation, 7% Apple, 2% Microsoft, 4%, approx 4% Nvidia, 2% Goldman Sachs, and similarly Home Depot, and these other primes, we have seen S&P 500 manage to close inside the zone. Okay, and now this is the first indication. It is not a confirmation. This is the first indication that the S&P 500 is trying to move up further. Okay, and yes, it can do so. On Monday, it has failed. It was rejected by the zone on Monday. Okay, that is why it was clear that now it will come down, and it came down heavily. Okay, so this was no surprise. Okay, but now that it has closed inside the zone, so Monday will confirm what is going to happen. I will discuss this in the next point of the agenda. Okay, probable movement, because the closing on Monday, okay, will clear a lot of things, right? For now, this small normal bullish candle is simply indicating that there are some bullish sentiments. But because the S&P 500 is still trading in the bearish trend and is still trading inside the Chimoku cloud, this means that there is a bearish pressure on the entire US stock market, including the S&P 500. So there are some good bullish sentiments, but under bearish pressure. Okay, but yes, there is this time one thing has changed, and this thing is that now these bullish sentiments have the potential to counter the pressure. Okay, and let's see what is happening in the Dow Jones. Okay, so there is a bad news from the Dow Jones, bad and good news. Okay, both are there, because Dow Jones has not given a kind of candle, okay, that was seen in the S&P 500. What has happened in the Dow Jones, okay, it started to trade bearish, it moved up, then the trend changed, it came down, it started to trade bearish below the Chimoku cloud. On Friday, it moved up, it managed to sustain, okay, inside the cloud. It has formed a bearish candle, okay, at the time of closing on Friday. And in my final update on Friday, I mentioned this to my Patreon community members, that if this kind of situation is seen, if this kind of closing is seen, in that case, it will put pressure on the Dow Jones and on the entire US stock market. But this pressure won't be heavy that it can bring down the entire market. This pressure will be in a manner that there will be some bearish movement, some bearish movement, but at the same time the market can try to move up. Okay, and everything will depend on the zone, that whether the S&P 500 manages to sustain above the zone on the hourly basis or not. Okay, so here through the Dow Jones, what we can see, that this candle it is a bearish candle, okay, and it is bringing pressure, and because the trend is still bearish, trading inside the Ichimoku cloud, pressure. So Dow Jones is more bearish, okay, or we can say less bullish as compared to the S&P 500. S&P 500, it seems more confident that yes, it is moving up or it might try to move up further, but Dow Jones is creating problem for the S&P 500. Okay, so I hope this part is clear. So we have discussed the candle. Okay, now let's discuss the technical indicators on the daily chart of the S&P 500. In terms of the technical indicators, what you are going to notice that yes, definitely there is something new. What is that? There is a clear fan out in the moving averages, bearish. Moving averages are bearish on the daily chart. Okay, this means that this bullish candle is not confirming any trend change, because the trend will change only when all of the technical indicators align bullish, including the moving averages. When the moving averages come in this particular order, in this particular fan out order, okay, then only we will say that now the trend has changed, okay, and now there will be more bullish movement or so. Moving averages are clearly bearish, okay, no change there. There may be some crossover in the moving averages on Monday, okay, we need to see, but this crossover will not bring back the moving averages in this particular fashion, because for this to happen we need 5 continuous bullish candles. Means from Monday to Friday, everything and all of the candles every day it should go bullish, then only we can say okay, now the trend has changed, moving averages are aligned in this particular manner. Okay, other than that, the Ichimoku cloud, okay, will act as neutral, and these indicators, okay, some bullish. Yes, MACD is bullish, okay, and the stochastic RSI is bullish, and this is a good news for the bulls, okay, because now the MACD and the stochastic RSI are going to favor the bulls. Okay, they will meet technically these two indicators, and as the concept says, and if you have subscribed to my YouTube channel for last many months or years, then you know that whenever the MACD and the stochastic RSI are aligned in a particular direction, then the movement or the pressure is seen in that particular direction. Okay, now there is a catch. Okay, so what's the catch? The catch is this movement. Okay, this movement will be I will show you in the Dow Jones. This movement is more clear in the Dow Jones. The catch is that we have seen earlier S&P 500 was heavily struggling, and it gave very limited bullish movement, and again it was coming down, gave very limited movement, and then finally there was a very linear, very clear bearish movement, right? Now recently we have seen it was trying to move up, failed, came down, formed a slip, came down. Then finally on Friday, because of that heavy manipulated movement on Friday, okay, we have seen that the stochastic RSI was also forced to go bullish, and the MACD also, okay, it went bullish. This means that the S&P 500 and the market is still struggling. Okay, the S&P 500 and the market is still struggling. That is why to confirm that whether it is going bullish or so, okay, in this the near term, okay, it will be very, very risky until and unless everything sustains, okay, and manipulation is not needed, because this was clearly manipulation that was to change the technicals, right, and nothing else. Yes, so what I was saying is that on the daily chart, the S&P 500 has changed to 60% bullish. Okay, now on the daily chart, S&P 500 is 60% bullish. On the weekly chart, S&P 500 is 70% bullish. This means that now overall the S&P 500 is 60 to 70% bullish. We can say 65% bullish, okay, through the daily and the weekly chart. Now let me show you this thing on the Dow Jones, that what is the problem here. Okay, the problem is through the Dow Jones. So everything is same, okay, but Dow Jones is more bearish as compared to Nasdaq or the S&P 500, because Nasdaq and S&P 500, they are the tech indices, okay, mostly driven by Microsoft, Apple, Nvidia, okay, or so. But Dow Jones is balanced, okay, and the only problem in the Dow Jones is the Goldman Sachs, okay, and you know that what the Goldman Sachs is, okay, and when the Goldman Sachs is brought into the picture, okay, so I will not discuss that. Now, if you notice, moving averages, okay, same fan out, a little crossover, okay, but that doesn't matter because the fan out is still there. Okay, moving averages are below, moving averages themselves, okay, are below the Chimoku cloud, so there is no change in the trend, okay. Now everything as is, and the Dow Jones is again, we can say like 60%, 50% bullish, 50-50, okay. Last week it was absolute bearish, and until I guess until Wednesday or Thursday, okay, Wednesday, yes, until Wednesday, Dow Jones was absolute 100% bearish, absolute bearish, okay. Yes, now let me show you the MACD of the Dow Jones, and this was the rough movement that I was talking about, okay. So if you notice that previously Dow Jones has not given this kind of rough movement, okay, it was either clearly bearish or bullish, okay, but here you will see that it moved up, okay, crossover bullish, came down, remained, okay, 2-3 days bearish, and then again this thing. This means that the Dow Jones is struggling, market is struggling, everything here in the picture clearly through the Dow Jones, through the MACD we can clearly see. So it doesn't matter what the manipulators are doing, okay, whether there is a manipulation or not, okay, whenever there is any struggle, then we always look into the MACD, because MACD tells us whether there is any struggle or not. Okay, clearly Dow Jones is showing us that there is heavy struggle, okay, that is why an external movement, an external force that we call as manipulation was required, okay, otherwise it was going absolute bearish, okay. There was no point, technically it was not allowed to trade, or technically it was not allowed to give this much of bullish retrace. Some bullish retrace was okay, 0.5% or so, but not 1.5% or above, okay. Now you have seen that the Dow Jones is clearly struggling, and the same struggle is there in the SP 500. That is why whatever this the bullish movement, the bullish retrace that we are seeing here in the picture that has happened. That is why this bullish retrace, this kind of bullish movement, sudden and heavy bullish movement, we cannot trust this movement, because it might not be a bullish movement, it might turn out to be a trap, as simple as that, okay, and this is nothing new. Anyways, whatever happens or whatever will happen, I will keep you posted through these the daily and the precise updates of the S&P 500 from Monday through Friday to my Patreon community members. And guys, if you have not yet joined my Patreon community, then you can join my Patreon community. And there is one more thing, that along with these the daily updates, the daily precise analysis of the S&P 500 from Monday through Friday, I also give the stock market opportunities in the premium stocks of the US stock market, minimum 5 to 10 every week. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here on my Patreon page, you will see that there are these two tiers. This is daily S&P 500 updates for non-US and Canada residents. This is daily S&P 500 updates for US and Canada residents. So whenever you subscribe to either of these, then you'll be getting the daily S&P 500 analysis, updates, probable movement, and the opportunities in the stock market, in the premium stocks of the US stock market, minimum 5 to 10 every week. And guys, if you notice, many people have joined my Patreon community and they are getting these daily and the precise updates of the S&P 500 from Monday through Friday for last many months, years. And they are very well aware of that what is expected to happen, what can happen, okay, the levels, the zones, and all of these things. So guys, whenever you want to join my Patreon community, I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I'm going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500 from May 6th, which is Monday, to May 10th, that will be Friday. So before I discuss the candles and these, you need to understand that next week is blank. Next week is blank. Blank means that there is no significant earnings, Means that, see, the earning season is over. Earning season is over for S&P 500 and Nasdaq, because all of these are tech primes have posted their earnings. Okay, some more companies will be posting the earnings, but these companies, okay, they do not have any significant weightage in the S&P 500 and the Nasdaq. In case of the Dow Jones, Disney and 2-3 companies are there. Okay, but that will impact the movement of the Dow Jones, but not much. Okay, so in a manner we can say that the earning season is over. Other than that, in terms of the data also, okay, it is blank. So this may be one of the reasons that why we have seen a manipulated movement when there was nothing favorable for the stock market. No technicals, no news, nothing, but rather whatever was there, it was simply bearish. Because after the Federal Reserve Chairman has confirmed that there might not come any rate cut in this year, he himself has said that Feds will take, okay, significant time, okay, or Feds needs more confidence. So this makes sense that because next week, okay, earnings are over, blank. So one thing for now we know is that recently unemployment rate, it has increased. Earlier it used to be 3.8%, now it is 3.9%, and this has happened, okay, after a few weeks or after a few months. Okay, so and then the Feds have said that there will be no rate cut. This means that the economy is heading to the recession. Okay, many might doubt or many might say that no, there will not be recession, but slowly it is heading to the recession. Okay, so now it makes sense that to bring the market up, to form a trap, and then everything down. Let's talk about the technicals and the numbers. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for these daily precise updates, precise analysis of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now in terms of the numbers and these levels and zones, on Monday, it will be very much clear whether the bearish trend will continue, okay, or if there will be a break in the bearish trend, means the trend will go neutral, or if there will be any chances for a bullish trend. Because now the S&P 500 is at the junction wherein it has entered into the zone, a very heavy zone, but it has failed. It has failed to clear the zone. It has failed to sustain above the zone. It has failed to close above the zone. Okay, so we need here, in this case, we need a minimum of 2 consecutive closings above the zone in order to confirm that the S&P 500 is going to sustain. Okay, and that it can move up further, and then the trend might change. As long as it is trading inside the zone or below the zone, absolutely no chances. Okay, it might look bullish, but all of a sudden it will fall. Okay, so this is no surprise, just like this thing. Okay, or these things. Okay, so this is very simple. Now, so bullish and bearish are simply, okay, these will be categorized by the zone itself. Now, other than the zone, okay, it is very simple to understand through the Dow Jones. So this closing, this kind of candle that was seen in the Dow Jones, it indicates that on Monday there will be some kind of bearish pressure on the entire US stock market. Now this bearish pressure does not mean that there will be heavy fall. Heavy fall may happen only and only if certain conditions are fulfilled. In case of the Dow Jones, the heavy fall can happen only if it loses the Ichimoku cloud. Once it loses the Ichimoku cloud, start to trade below the Ichimoku cloud, this means that now there is no other support, it has to come down, and when the Dow Jones will come down, it will bring everything down with it. Okay, so that is one. Okay, this is the important thing. Only and only if, or if the Dow Jones sustains inside the Ichimoku cloud or above the lower boundary of the Ichimoku cloud, in that case, we can say that S&P 500 will also try to sustain inside the zone. Because if there comes even a single rejection from the zone, especially on the hourly charts, if there comes a single rejection from the zone on the hourly charts, then this can create problem for the S&P 500. Or if there comes the first half, means the 4 hourly candle, okay, that rejection here, okay, from the zone, then also that will create a problem for the S&P 500. For the S&P 500 to clear the zone, to sustain above the zone, the Dow Jones must trade above its previous closing, or above, not just previous closing, Dow Jones must trade above its high. Okay, and the high price of the Dow Jones was 38,808. 38,808. Dow Jones must trade above 38,808 and it must sustain above 38,808 so that we can say that S&P 500 is sustaining inside the zone or might have breached the zone. If you are my Patreon community member, okay, then I will give you the updates, the daily updates, the first update, second update, and I will tell you whether the S&P 500 has sustained or has cleared the zone or not, or if it is struggling or if it was rejected. As simple as that. Okay, so this condition is there. So we can clearly see that Dow Jones will tell us, okay, what is expected to happen and what can happen here in this case. Okay, now for the Dow Jones there is a problem. For the Dow Jones, the problem is that around the same mark, 38,808, okay, or 38,815 approx, there is a very strong resistance, and Dow Jones must clear this strong resistance, must continuously sustain above this strong resistance so that we can say that yes, the market is sustaining or market is in a condition to sustain. Okay, now if the Dow Jones closes above, okay, at by the end of the day on Monday, if the Dow Jones closes above its previous high, this means that most likely or highly likely the S&P 500 has closed either inside the zone or above the zone. Okay, and then we will wait for a second closing. But now on that day it will be quite clear that now the S&P 500 is going to move up. Question is that if the S&P 500 moves up, then where it is to what level it will be heading to. When you apply the Fibonacci retracement, okay, considering this is the high, this is the low, then you will notice at around 5146. 5146, there is the 61.8% of the Fibonacci retracement level. Now, why the Fibonacci retracement level or why the Fibonacci is so important here? Fibonacci is important because if the S&P 500 clears the zone, sustains above the zone, closes above the zone, but it fails to close above 5146, in that case this the upward movement, bullish movement, or this the manipulation, it won't be of any use. Eventually it will have to give up and it will have to come down, because during these the bearish times or during the bearish movement, okay, let me show you here, in the month of July, okay, when it started to come down, then we have seen suddenly same kind of heavy bullish movement, moved up, it failed at the Fibonacci level, it came down, moved up, failed at the Fibonacci level, came down. Okay, so this is why we are talking about the Fibonacci, okay, because Fibonacci is generally used, okay, during the retracement in the bullish side and also in the bearish side. Okay, so if you notice, yes, there is one more thing. Okay, this is the 200-day moving average, this is around 4,750 or 60. Okay, and S&P 500 is still, okay, it has not respected, it has not hit this the 200-day moving average last many months. Okay, so that is another reason. Anyways, so what we know is that for now S&P 500 is trying to move up to 5146. What it means? This means that intraday a breach, intraday a hit to 5146 or even a little breach, that is perfectly normal, not a problem. The problem will happen or the entire scenario will change if the S&P 500 gives a closing above 5146, because once the S&P 500 sustains, gives one closing, very much clear, okay, not 100% but very much clear that now the S&P 500 and the market is not looking for any retracement, bearish side retracement or so. Okay, it wants to move up. When there comes two closings above 5146, okay, that now it is almost 99.99% confirmed that the market is going to change the trend. Okay, there will be some other conditions, but through this only, okay, we can anticipate, okay, heavily anticipate that yes, now the market is going to change the trend. This means that 5146 is the Fibonacci retracement level here. Similarly, in the Dow Jones, the Fibonacci retracement level is around 39,000 or 38,900 something. Okay, so you can simply draw this the Fibonacci level. It will be around 39,000 approx sharply, or 38,990 or 980 or so. So this means that this 61.8% of the Fibonacci retracement level, okay, whether S&P 500 fulfills that condition or the Dow Jones fulfills that condition, whichever of these the indices fulfills that condition, this condition will be considered, or this obligation will be considered as fulfilled, and then there will be a retrace. Okay, this is very simple principle. So this means that even this means that S&P 500 struggles, fails to move up to 5146. It is struggling to clear the zone, but at the same time the Dow Jones is moving up, and Dow Jones has fulfilled its the condition, okay, of the Fibonacci retracement. Then also it will be considered, okay, or that the condition has been fulfilled, and now there will be a retrace, and S&P 500, in that case S&P 500 need not to move to 5146. It can simply retrace, it can give a fall, and done. Okay, so 5146 is very important, very critical. Before 5146, okay, there is a level, my calculated level, very strong level, okay, or if the S&P 500 closes below 5146, and also if it closes below my calculated level, fall, rejection, heavy rejection. Okay, similarly there is a heavy resistance level, okay, before 38,900 or so. Okay, if the Dow Jones hits and fails to close above its 61.8% and also below my resistance level, okay, fall, okay. So, and then the zone is there. Okay, so this is the picture in the bullish side. What is there in the bearish side? Now bearish side is getting more and more clear, because if the S&P 500 comes down either on Monday, Tuesday, Wednesday, okay, then it will lose the Dow Jones, then it will lose the Ichimoku cloud. Okay, earlier it came down to 4967, okay, but then also it was sustaining, it was trading inside the Ichimoku cloud. But now it will lose the Ichimoku cloud around 5050 or 5060, okay, whenever it comes down. This means that now if there comes any fall or approximately fall from the previous closing, okay, around 1.5% fall, you can say 1.5% fall within 1 day, within 2 days, within 3 days, within 4-5 days, okay, by Friday, if there comes 1.5% fall from the previous closing, from the Friday's closing, in that case it will enter into the bearish side. The true bearish impact, or the true impact of the bearish trend will then be seen. More and heavy red candles will be seen, and then 200-day EMA will be there in the picture around 4,700 or so. This means that for the S&P 500 the zone is very critical. Other than the zone, the Ichimoku cloud is also very critical, because S&P 500 is sustaining, will sustain without any doubt. It will sustain as long as it is closing in, or it is trading inside the Ichimoku cloud. The day it loses the Ichimoku cloud, the day it comes down, it gives a closing below the Ichimoku cloud, it is done. The entire stock market will then move into the bearish side, just like what I have shown you, that in July it came down, retraced 61.8, failed, moved up, failed, and this, okay, then that will be the movement. Okay, similarly here also Dow Jones is in a much better condition to lose the Ichimoku cloud as compared to the S&P 500, because we have seen that Dow Jones, it was closing below, moved up, then failed, then again closing below, okay, trading below. So again it is there in this the condition. By Tuesday, by Wednesday the Ichimoku cloud will be around here, okay, more than this the high of the previous candle. This means that by Wednesday Dow Jones will have to close above its previous high 38,808. If Dow Jones manages to close above 38,808, then we can say yes, something is changing, or the trend might change in the coming days. But if the Dow Jones fails, if it closes below this the Ichimoku cloud, okay, just one closing, okay, that will also be sufficient, because that will then bring it back, okay, into this the bearish trend. Okay, so that's not a rocket science. But whatever is going to happen, whatever will happen, I will keep you posted through these the daily and the precise updates of the S&P 500 every day from Monday through Friday, if you are my Patreon community member. And if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and then you'll be getting these daily and the precise updates, and you will be well aware of everything what is going to happen, whether there is a trap or an opportunity, whether it is going to come down or not. But this time what we know is that in the bull side, if it manages to clear, if the S&P 500 manages to clear 5146, okay, definitely one thing is that the trend might change. Other than that, the movement will be then towards 5200. Okay, in the bearish side, if it loses, if it comes down, then this time definitely it will be coming down and it will be losing this the previous low. Okay, and 4921, it is long pending 4921. In that case 4921 will be there, and then 4818 will also be there, 4818. Okay, so guys, hit like if you have liked this video, and if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon, and join my Patreon community if you want to get the daily precise updates of the S&P 500 from Monday through Friday. So guys, this was my S&P 500 weekly technical analysis for the week of May 6th. Means from May 6th, which is Monday, to May 10th, that will be Friday.